Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody. Let's take a look again on the euro currency. So actually it's not too many things to talk about today. As you can see, market stands mostly flat, and interesting that almost all currencies stands flat. So nobody would like to take the sharp moves ahead of the CPI report, which should come yesterday, should come tomorrow. Yesterday, guys, as we have mentioned now on Telegram channel, there was a speech of the Jerome Powell in some private banking meeting. But as you can see, it makes no impact on the market at all. So it's probably either Jerome Powell hasn't said anything new, or it just was so private that that's just few people was able to watch it. So whatever it was, actually we do not have any big changes. So currently, as investors prefer to sit on their hands and just wait for numbers. And what is more interesting is that actually we have the same situation on all other major currencies. So starting from the euro, cable, Japanese yen, Asia Pacific currencies, New Zealand dollar, Australian dollar, and so on. So it's actually, you will not find probably any really inspiring and interesting stuff for trading immediately. So it's probably we should wait. Still on the euro currency, we have some signs that suggest some bullish context exist. So on a daily chart it might be not as visible as on the intraday chart. So take a look at the hourly chart we have here. It's clearly the consolidation near the resistance. Also recall that actually 1750 1750 is a major weekly resistance level, and market stands in the tight range right below it. It always suggests some bullish background. So of course currently it is obvious that CPI numbers will make the day, and actually whatever the technical picture suggests, only the numbers will determine what the direction market will follow. But at least technical background currently suggests that this is bullish performance. So market, every time when it shows the very tight consolidation below under the strong level, it is the preparation for a challenge. It is some power accumulation, the building and energy for possible attempt to break through. And here is what we see in particular here on the fall time frame chart. On the hourly chart, it's also might be suggested that here we could get the minor butterfly pattern, and with the extension of the butterfly, it stands around 107.90. Well, it's very close to the daily target. It's nearest standing target 108.05. So probably the minor butterfly that's forming inside of this consolidation, this will be could lead market to complete the first extension on the daily chart. So that's particularly what we could consider. So although we initially talked about the possible deeper retracement to some support area, but you can see that it is not happening. So market just stands flat. In the current circumstances, if you still would like to take the long position, you do not have a lot of options. So you will have either to ignore all the stuff, wait for the CPI numbers release, and if market will show the pullback, you will be watching for some support areas. Or you could take the additional risk, try and take the position in a tighter range, for instance right inside the flag with the stop somewhere below these areas, and be prepared for upward breakout. But in this case, you're accepting and taking the risk of the data release. What has happened last week on the payrolls report, I shouldn't remind you, so you probably remember that. So every time when you're deciding to deal with the data release, it's always you could meet as a big problems as a really big success. So it's difficult to say, but in general this is a psychological issue, and not everybody is suitable, and not everybody feels comfortable with it. So that's what we have around this stuff. Additionally, well, currently maybe it makes not big sense, but final way how you could try to act is, for instance, using stop buy order slightly above this area. So for instance, if market will start growing, you're step in using the stop buy order, and market accelerating further, you're taking the position. Additionally, if downward action starts, your order just will not be executed. But as you understand, with the coming data release, the chances that on some volatility and shaking the boat by the market makers, very difficult to stay aside, especially when here's really very small distance between the current market and where you potentially could place the order. In other circumstances where we wouldn't have any data releases, that might be a good solution. But currently, in fact, as I said, you have to choose from the two options. Either do nothing, wait for report and then see what will happen, or trying to take the position inside of this consolidation and hoping that you will get straightforward acceleration and breaking the resistance. The only advantage of this way is that you will get relatively small potential stop, so you will have to place it slightly below this area. So because if you succeed, it probably will be direct upward acceleration. Anyway, if you will lose the money, this will not be a really big loss. So because it's really small distance between the current level 107.46, 107.20 approximately, or 15, it's around 30 pips. So that's actually two options that we have, and well, probably hardly something will change until tomorrow's data release.